just very briefly today, we had Bitcoin trading at $31,000. I mean, who would have thunk it a year ago? Maybe a little bit less than a year ago. Who would have thunk it back in January? And that is because we've had some incredible gains this past month, and really this entire year. So joining us now to discuss the crypto markets is CoinDesk Indices Head of Research, Todd Groth. Welcome, Todd.
Good to be here. Welcome.
Glad to see you. So, Bitcoin up 20% in the past 30 days. But what's happened in the past quarter, meaning, April, May, June?
So, looking back here, first off, we started the quarter strong with Consensus, the conference in Austin, and then from there we've been in a bit of a range. And we've tested the high end of the range, the low end of the range. May in some sense was fairly muted, coming back from a good April, and that was all. This is all also been on the back of SVB in March. So with May, what we had was that there was sort of treading water in the markets, range bound again. And part of that was crypto being exposed to macro headwinds of the repricing of interest rate cuts or pricing in no cuts for the end of this year. In March, we had 3 cuts priced in. Then it took a range bound May to basically take those cuts out of expectations, so that there was no dovish view towards the end of the year. And over that time, we had a lot more on-chain activity with meme tokens, Pepe specifically. Just in a few days, going up to 1.5 billion market cap. Now it's around around half that. So that was sort of April, May, and then June. We've had a sort of two primary events that have resulted in. First off, we had the Binance and Coinbase SEC announcements. That really put a damper on all the medium to small cap alternative tokens. They're still down relative to Ethereum or Bitcoin. So you have that combined with then BlackRock filing for the Bitcoin spot ETF, which was obviously very Bitcoin positive. That's resulted in a pretty big bifurcation in this market. I know we sort of had that before with the futures, CFTC considering both Bitcoin and Ethereum to be commodities. Everything else is security. That continues to play out, and so with that, we're seeing Bitcoin dominance back above 50%.
Let's dig in a little bit on the issue of the sectors, right? So DAX, the digital asset classification standards that CoinDesk has put together, it divides the market into several sectors. What about those sectors? And you talk about this bifurcation. Mm-hmm. What does that mean going forward, or what did we learn in the recent past that could tell us of why and where we are today?
So we're seeing that bifurcation sort of play out even within the sectors, because both currency and smart contract platform they contain Bitcoin and Ether tokens within them respectively, and those have been relative outperformers. Especially compared to digitization, culture and entertainment, computing sector. Those had some of the names listed in the SEC enforcement action of Coinbase offering unregistered securities. So that's really sort of split the market into those different themes of those that are regulated, i.e. Bitcoin and Ether under commodities law, versus everything else effectively. So we have continued to see that, and I guess in summary, Q2 of this year was very, very much more of a relative value market as opposed to Q1, where Q1 we had a big reversal, sort of a January effect plus in the broad market, which had a significant bounce versus 2022.
Tell us a bit more about what the Bitcoin and Ether trend indicators are showing us for the rest of this year.
So currently they're both registering strong positive trends upward. So that's been a good indication. And actually, when you look back at the trend indicator readings in April and May, mentioned sort of range-bound markets, that was reflected in the indicator. So what's nice about the indicator is it's a way to kind of filter out the day-to-day noise. As we're trading through this range, we're currently on the higher end of the range, but the range generally does have a positive slope to the upside. And that's been shown in the both trend indicators. For June, we primarily had Bitcoin as a positive trend, whereas as Ether was a mildly initially a neutral indication to a slightly positive. Now that's full positive. So both of them currently are pointing to strong positive trends in the market. So we have the Bitcoin trend indicators. Also thinking about more macro indicators. We have sort of two offsetting effects currently. So we're starting to see rates rise again, both real yields and nominal yields. This morning, actually, the 2-year U.S. 2-year was about 5%, the 10-year about 4%, which are on the upper end of the range. That's been a bit risk negative in the market, and we've actually seen that this morning with Bitcoin selling off a bit from last night's rise higher. But that's offset with credit spreads that are still tightening, which is risk positive. So those sort of offset each other. The bigger elephant in the room is the inverted yield curve. We've been inverted since last July. That's generally a 6 to 18 month out indicator. It's the most inverted since the early 80s, and it continues to invert. So that is
going to happen any day now.
Exactly, any day. We've got a clock over our heads in this market. So it's a matter of when it strikes. When does the yield curve strike? It's been a leading indicator for all but one recession since the 1950s, I believe. So TBD on that. It'll be interesting to see where we go with that, and part of that will have to be the monetary response going into that recession, as to where crypto goes from there.
Todd, thank you very much for joining us this morning.
Thanks for having me.
That was CoinDesk Indices Head of Research, Todd Groth.